Hello traders, and welcome back to the Forex Chick. Today we're going to be talking about a useful tool in technical analysis, which is the Market Facilitation Index, or the MFI for short. As you will soon discover, the MFI can help you gauge market strength, identify potential trend reversals, and make more informed trading decisions. So stay tuned as we break down the components of this indicator, explain how to interpret its signals, and demonstrate practical ways to incorporate it into your trading approach. So without wasting your time, let's get started. So first, what is the Market Facilitation Index? The Market Facilitation Index is a technical analysis tool developed by a renowned trader, Bill Williams. It's designed to measure how effectively the market is facilitating price. In simpler terms, it tells you how well the market is doing its job of price discovery. So this is the MFI. You can see I've already attached it to my chart. This is the trading view platform, and this is the AUD USD chart, daily chart. So the MFI compares two main components: price range and volume. And price range is the difference between the highest and lowest prices within a specific time frame, and volume is the total amount of trading activity or the number of contracts traded during that same time frame. So by analyzing these two components together, the MFI reveals whether the market is moving efficiently or if there's a disconnect between price action and trading activity. So as you can see on this chart, the MFI is typically displayed as a histogram below the price chart. The height of each bar represents the strength of market facilitation at that point in time. So the beauty of the MFI lies in its ability to cut through the market noise. It doesn't just tell us if prices are going up or down, it tells us how well the market is moving in that direction. So this insight can be very crucial for timing your trades, your entries and exits more effectively. So let's talk about the color codes. You can see the MFI has the green color, the brown color. In its histogram, it has the pink color. You can see this blue color here also. So let me explain that. So these colors provide a quick visual representation of market conditions, allowing you to instantly gauge market behavior. So the green bars, you can see these tall green bars, they indicate that both the MFI and volume are increasing. So you think of the green bars as a green light for the current trend. This suggests that the market is moving efficiently with price and volume in harmony. So when you see green bars, it's often a signal that the current trend is likely to continue. This could be an excellent opportunity to enter a trade in the direction of the trend. You can see this multiple green bars right here showing that yes, this bullish trend is a strong one. See this green bar here, multiple green bars. See this one here. All these multiple green bars all signal one thing, that yes, the trend is a strong one. And you can see the trend. You can see this making higher highs, higher lows, and you can see this breakout there. So next is the brown bars. Let me talk about the brown bars. Delete this off my chart. So the brown bars appear when both the MFI and volume are decreasing. So the brown bars are like a yellow caution light warning you that the current trend might be losing steam. The current trend might be losing its steam. So the brown bars often indicate that traders are losing interest in the current price movement. This could be a sign to tighten your stop loss or consider exiting your position. So you can see here you have this series of brown bars right here. It shows that the trend might be losing steam. It just might, you never can tell. So you can see this bearish trend which ended here. See, had this trend, and you can see the brown bars, series of brown bars right there. It could be that the trend is losing steam, and it was confirmed by this gap. You can see this gap here, and we broke this resistance right here, came back, retested it, and continued to the upside. That's all based on a series of brown bars. I'm going to explain the pink bar so that you get more context as to why this happened here. This was resistance turn support right here. So the pink bars, let me explain the pink bars. So the pink bars show up when the MFI is decreasing but volume is increasing. Pink bars represent a tug of war in the market between bulls and bears. So the pink bars often precede significant market moves. They indicate that there is a lot of activity, but the market hasn't decided on a direction yet. This could be a sign of an impending breakout. So you can see this series of pink bars right here. See 3 consecutive pink bars right there. 1, 2, 3. And you can see this breakout, this massive breakout, which was confirmed by this gap here. You can see a series of doji candles right there, which further confirmed that yes, there might be a bullish trend starting. And you can see the breakout happened. We had this break of this resistance level here, and there was a retest to continue the upside. So, and the next is the blue bars. So the blue bars occurs when the MFI is increasing but volume is decreasing. So the blue bars are like a flashing blue light alerting you to potential fake moves in the market. So when you see blue bars, be cautious. The price might be moving but without the backing of volume, and this movement could be unsustainable. So that's it. That's how you can use the blue bars. Are just basically caution signs. You can't really put them up in a strategy. So the two main strategies to using the Market Facilitation Index MFI is the green bar strategy and the pink bar strategy. So like I explained before, the green bar strategy just means that when you see a series of green bars, it's often a signal to trade in the direction of the trend. So green bars indicate that both price range and volume are increasing, suggesting strong market momentum. So you wait for a series of green bars to form, and you enter a trade in the direction of the trend. You could wait to see candlestick patterns, like you can see this engulfing right here, series of green bars below, and yes, that could be a confirmation that yes, we should trade in line with the trend. You can see price gave us this retracement here and continues to the upside. So that's how you can use the green bar. I think I saw one in AUD USD. You can see this series of green bars right here. You can see that. And we were in a downtrend on AUD USD. You can see this. And price gave us these green bars right there, showing that yes, this downtrend is a strong one. You can see that price broke structure right here, came back and retested this support level to continue in the downtrend, because the green bars indicate that the downtrend is a strong one, of course. So you can see that this support here turned resistance. The green bars basically indicate that the trend is a strong one and we should trade in line with the trend. See the series of green bars continued. More green bars. You see more green bars than other bars. yes, that indicates that the trend is strong. You see these blue bars right here indicate that they are warning signs that the trend might be losing its steam. I explained this earlier. You can see this series of blue bars, and just after that you see this consolidation right here before the final breakout. See this series of consolidation here, and price broke out of this resistance, and we had this pullback into support level right here to continue the trend upwards. It was all from the signal from a series of blue bars on the MFI, signifying that yes, market might be losing its steam. So the next strategy, like I explained before, is the pink bar strategy or squats, and they can be powerful indicators of potential breakouts. So when you see a pink bar, it means that there's high volume but little price movement, a situation that often precedes a significant market move. Like I explained here, you can see series of pink bars, and you can see this breakout that happened right here. So it's crucial to know that while these strategies can be effective, they should always be used with proper risk management. No strategy is foolproof, and the MFI should be one tool in your broader trading toolkit. Additionally, consider using the MFI to validate signals from other indicators. For example, if you see a bullish crossover on your moving average and it coincides with green bars on the MFI, it could provide a stronger confirmation for your trade entry. For example, you have this right here. Just gonna insert the moving average to confirm this trend. Moving average. So we have the moving average here. I'm just gonna use 21, and you can see the cross, the moving average cross right here, signaling that yes, market is indeed turning bullish after this pink series of pink bars here. You can see a series of pink bars indicated that yes, there might be a breakout, and you can see the moving average confirms that. I think I should increase this to 50. Okay. Right, you can see the cross was here, and yes, you can see the bullish trend continued after the series of green bars, showing us that yes, this trend is a strong one after the moving average cross. So that's just one way to confirm your trades using the MFI. So alright traders, you've come to the end of the video. If you found this video helpful, please hit the like button and subscribe to our channel for more forex trading insights. Don't forget to turn on the notification bell to stay updated with our latest content. Thank you for tuning in, and until next time, happy trading.